Good morning, traders. It is 5:28 a.m. May 16th, 2016, and it is time for the pre-market prep video Monday morning. So, looking at the SPY on Friday, the SPY had a little bit of an increased volume as it traded to the downside and came back from its rally here on the 10th and has been fairly bearish ever since, and it's trading down into this support area. Looks like it wants to get back there fairly quickly. So on increased volume, you have to say this is kind of bearish looking for the market. It doesn't look like the 50-day is adding much support anymore, although we will see it could be supported here today. It could go up, but definitely more of a bearish look to it the last 3 days and on increasing volume here. So we have to say that this is has a bearish inclination. I think one of the most bearish looks that we can see is the breakdown in Apple. So Apple had been trading in this range, kind of holding this 92 area, this 92.50 area, kind of consolidating, and it just broke that and traded down to 90 almost immediately. So this is definitely bearish on volume. So this is a bearish breakout for Apple. The question is, where does it go from here? And I think if you look at it, definitely doesn't have a whole lot of support from here. This 92.50 area was indeed a large support, so now that becomes resistance. I would not be surprised if it makes a rally to try to rally back into that area. So if we look here, this is just a major support area that it broke down from. So there's really not a whole lot of support for Apple, even really until we get to 80s, until we get into 80s. So this is a very important level for Apple. It's very important to see how it trades from here. I would not be surprised if it tries to rally back into this resistance area, into 92, 92.50, and at that point I think it's a very nice short. If it does, it could just run away, fold from here and just go down. However, I do think my opinion is it'll probably try to bounce into the 92 area, and at that point is a sell. But if you look at Apple's impact on the NASDAQ, so still this NASDAQ chart doesn't look like it's ready to break down yet, but definitely bearish inclination the last 3 days. And if we look at the Russell's had the the worst of it, although there is support at a lower level here as well for the Russell. So breakdown in Apple could be foretelling breakdowns in the major indices, but that hasn't happened yet. So if we look at gold, gold consolidating after its second breakout here on at the end of April, beginning of May, basically been consolidating since then. So it's been consolidating, broke out, and now consolidating again. So the question will be, will it break out from here? And how long will that take, etc., etc. it has been respecting kind of this uptrend line in a pretty healthy manner. It's up pretty high in pre-market, and a lot of this has to do with the dollar and dollar strength. So dollar had quite a big day on Friday, so I would not be surprised. Kind of this shooting star. So it looks like it is lower pre-market, so we'll see how that goes. But I wouldn't be surprised if it fell from here. It's kind of at its trend line. It's not quite at the trend line, but you can see if it's a degrading pattern. Sometimes stocks don't go in straight lines, right? They go in these kind of wave patterns. So if it's this kind of wave pattern, then we could see downward movement from here, which is my inclination, what I think is going to happen. But as the dollar sells off, that's going to be make it easier on the indexes, and easier on gold to rally from here. If it were to break out and move higher, that would put pressure on both gold and the indexes. So we'll see. We'll have to keep an eye on that. It will also put pressure on oil, but oil is also looking more constructive. It's got that 200-day moving average to contend with here. We'll see where things go from here, but it still looks like a consolidation in a downtrend. But it is looking more constructive. I wouldn't be surprised to see a pause in this in this kind of up move, and to see it consolidate for a little while, but that hasn't been really the case so far. So looking at the week ahead, this morning we've got some manufacturing data, and the housing market index for the U.S. But other than that, not a whole lot of fundamental data going on. So looking at some of the trade setups that our strategies have triggered, that my strategies have triggered. Here we've got all short strategies, so we are still in a range market, kind of a flat 200-day. So we do have a lot of shorts. So if we're looking here, Delek U.S. Holdings, oil and gas. So this is an interesting one. These are all for June 17th expiration. I'm not sure if I'm a fan of this particular one. Let's look. So I would wait for it to trade up into this area, although it does have both support and resistance. So if it were to break down from here, you can see it going down, but not that sure about that one. Honda. So obviously this looks very bearish. It is an ADR, so it is going to be heavily dependent on the US dollar. This actually does look pretty good as a short, so you can look into that. Usually I'm not a big fan of ADRs. Honda had bad earnings, it looks like, on the 13th. So Honda. AN, AutoNation. So it looks like we are not a fan of the auto dealerships. So this looks interesting as well, kind of this very wavy pattern here. So that's something to look at. HRS, Harris Corporation, very choppy looking chart. Did break down. Looks like it's got a little rally from a breakdown, so it can go that. Running out of time. UBS, obviously foreign bank, looks good, and HSBC. foreign bank.